Hey everyone, welcome back to Corporate Decoder. Today we are diving into a proxy statement from Vince Holding Corporation. That's a clothing company. You know, the kind that might leave you wondering if you are paying for the clothes or just the brand name. Get ready, because this report is full of juicy details from executive pay to boardroom drama. This is basically a notice for their annual meeting, like a school board meeting, but for a company. They're asking shareholders to vote on some important things, like who gets to be on the board of directors and how much the top executives get paid. It's like deciding who gets the best seat at the lunch table and how big their slice of pizza is. If you want those to be fair, the Discord channel in the description is where you can find great people and insights. First up, they need to elect 3 people to the board of directors. These directors will serve for 3 years until the meeting in 2028. The nominees are Kelly Griffin, Brendan Hoffman, and Eugenia Ulasewicz. Seems like they are hoping to keep things steady. Next, they want shareholders to say yes to keeping PricewaterhouseCoopers LL accounting firm for the next year. It's like asking if you're okay with the same person doing your taxes again. Usually it's just a formality, but it's important to make sure the numbers are being checked by someone reliable. Here is a juicy one. They're asking shareholders to give a thumbs up or down to how much the top executives are getting paid. This vote isn't binding, meaning the company doesn't have to listen, but it's a way for shareholders to voice their opinion on whether the executives are worth their salaries. It's like saying, hey, are these guys earning their keep? They also want to know how often you want to vote on executive pay. Every year, every 2 years, or every 3 years. The board recommends once a year. Let's meet the players. The board of directors is made up of 8 people with 1 seat open. They're a mix of experienced folks from different backgrounds, including finance, retail, and fashion. The company has split the roles of chairman of the board and CEO. Michael Mardy is the chairman and Brendan Hoffman is the chief executive officer. Splitting the job makes sure management and the board don't always see eye to eye. This provides a checks and balance in strategy. This is a group responsible for making sure the company's financial statements are accurate and that the accounting firm is doing its job right. They're basically the watchdogs of the company's finances. This is the group that decides how much the top executives get paid. They look at things like how well the company is doing and what other companies are paying their executives. The goal is to attract and keep talented leaders. This committee finds people who could be good members of the board of directors, thinks about the organization of the board, suggests the practices that should be used, determines what the directors should be paid, and looks at any deals where company insiders benefit to make sure there is no conflict of interests. When they are picking people for the board, they look for people with a mix of skills and experience in areas like fashion, retail, finance, and law. They also want people who have experience leading big companies. The board members get paid for their service. They get an annual retainer and extra pay for being chairman or leading a committee. They also get stock in the company. A quick look at the table shows that someone like Michael Mardy, as chairman and on the audit committee, gets the most at $85,000 cash plus $75,000 cash plus $75,000 cash plus $75,000 in stock. Time to talk about the accountants. Shareholders are being asked to say okay to PricewaterhouseCoopers L continuing to be the company's independent auditor. This is important because these are the folks who check the books and make sure everything looks right. For the last year, PricewaterhouseCoopers charged Vince $1.7 on $18 million for audit fees. That's a lot of money. But it's their most important financial safeguard. It ensures that all financial aspects are up to snuff. Here is where the shareholders get to say what they think of executive compensation. A yay vote shows support for the pay packages that the execs are getting. Vince says it tries to pay its executives fairly based on a number of factors. One element is how well the company is doing. The board also says it reviews similar information with companies of the same size. Okay, let's get into some numbers. The table shows how much the top executives made in the last 2 years. In 2024, the interim dollars and dollars president made $967,000 and lead minus $672,000. It's always interesting to see if these numbers match up to how well the company actually did. This table details any stock options or awards that executives haven't yet received. Think of it as uncollected bonuses, the incentive to keep stock price up. This section digs deeper into how the company's performance measures against the compensation of the CEO and executives. In 2023, the compensation for named executive officers decreased while the company's net income went up a lot. However, in 2024, there's no direct relation because several executives departed from the company. So it seems like when things got better for Vince, the leaders reaped rewards as expected. When times weren't good, things didn't really match up as perfectly, if at all. Time to see who owns the most shares. P1ID Vince Acquisition Co. owns over half, about 56% of the company's stock. Brendan Hoffman, the CEO, is listed as owning a similar number because of his tie to P180. Having a majority owner can give a company some direction, but it also means that smaller shareholders have less of a say. Vince has a partnership with ABG Vince. They operate as a limited liability company. The company accounts for 25% of its interest and records profits and losses based on distribution by ABG Vince, which reduced the carrying amount of the investment. Vince has a licensing deal to use its own brand name. Royalties will need to be paid to continue use. In the past, Vince had a debt agreement where they owed money to SK Financial Services, which used to be connected to Sun Capital. Basically, they borrowed money and Sun Capital was in the loop. To get clear of obligations, P180 Vince acquisition has taken over, paying off all debt. For years, Sun Capital used to get paid for just giving advice to the company. Finally, a few housekeeping items. The company reports that everyone filed their paperwork about owning stock on time, except for a few instances. So, what's the story here? Vince Holding is at an interesting crossroads. It has a new majority owner, P180, which could bring fresh ideas and capital, but the company also has a lot of debt and it's paying its executives a lot of money, even when the company isn't doing so well. A notable risk is if P180 can't clear off Sun Capital's obligations by the September deadline, as that will affect the amount of stock P180 owns. Also, Vince is reliant on ABG Vince as part of the business and operation process. Overall, it seems like the company is trying to turn things around, but it's still facing some challenges. Can they manage their debt, keep their executives happy, and find a way to grow? The next annual meeting should be interesting. Alright, that's our breakdown of Vince Holdings' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.